At the risk of blowing my own trumpet, the very last page of that new edition in 2018 said that the next crisis would come from China.
That's
I
right.
didn't specifically say that it would be a pandemic, but I think the key point was that in the wake of the global financial crisis, which had essentially been made in America, the next obvious vulnerability in the global economy was the sheer size of the Chinese economy. And sure enough, beginning right at the start of this year, I saw that this new pathogen in Wuhan was very likely to be the next pandemic, and that proved right. I think my commentary this year on events has been pretty good by simply applying history and saying, look, pandemics often start in China. Don't believe what the Chinese say at the beginning of such an outbreak any more than you believe the Soviets when Chernobyl blew up, and expect the pandemic to be global and to come in multiple waves. All of those were relatively easy inferences from history. But it was surprising to me back in January and February how very few commentators appreciated that we were actually in the opening phase of a global pandemic, and that the United States would be hit especially hard by it because it's a very open networked society, perfect breeding ground for a new pathogen. Economic and political elite talking about climate change, and I was kind of running around the conference center saying, I take that seriously, but there is this pathogen on its way here in jet planes from Wuhan. And by the way, there are delegates from Wuhan at this conference. Do you realize that this could be a super spreader event? And very, very few people in January appreciated the magnitude of what was happening, showing, I think, how little the elite really understands history. And it is, I think, a sad reflection on the way the world is run that relatively few people with good historical education get to the top. Well, I moved to Stanford 4 years ago for a variety of reasons. I wasn't particularly following the masters of the universe from Wall Street
Sure.
to Silicon Valley, but certainly it helped to be there then because I was immediately struck by a similarity. The atmosphere in Silicon Valley in 2016 was quite a lot like the atmosphere in Wall Street before the financial crisis. There was a kind of sense of, well, history doesn't apply to us because we've invented the world anew. And that hubris, which was very obvious when I arrived, was followed not long after by Nemesis, the great controversy over the role of Facebook in particular in the 2016 election. So I wrote The Square and the Tower rather as a sort of Silicon Valley version of The Ascent of Money, trying to explain why the rise of the internet has fundamentally altered the public sphere itself in ways that have no real analogy until you go all the way back to the time of the printing press in Europe from the late 15th century. And so one of the arguments I've been making for a lot the last 4 years is essentially stop thinking that we're in the mid-20th century. Enough with the analogies with the 1920s and 1930s. They're really unhelpful because actually our world is much more like the Europe of the printing press, where a new communications technology radically reduces the cost of information sharing, which sounds like a great idea, except that there are lots of little catches, unintended consequences, polarization, proliferation of fake news, all that kind of thing. So The Square and the Tower is essentially an attempt to make historical sense of the internet, and particularly the rise of the network platforms. I want to take you back a bit further than 2016, though, to a conversation I had 2 years previous to that in 2014 with my son, who was then 15 and is now 21. Lachlan was always a kind of entrepreneurial kid who had his own online apparel company around about that time. And I remember him saying to me, I think one summer in Martha's Vineyard, you know, Dad, we really ought to be buying this thing called Bitcoin. And like the arrogant Harvard professor I then was, I said, "Pah, son, I have to disabuse you of this naive notion because there's no way that governments around the world are going to allow a new kind of money to come into existence that they don't control. So put aside this thought of investing in Bitcoin. This is a mere epiphenomenon." And I've had cause to eat my words and rue the day I ignored him. And particularly in 2017, when we were spending quite a lot of time together during his gap year, I think he reminded me on a pretty much weekly basis how much money we could have made if I'd listened to him. So one lesson of my recent experience is do listen to your teenage children, because it's probable that they at 15 understand better than you at 50 what is going on in this new and rapidly evolving world. So I kind of learnt my lesson, and it was partly that experience that led me to dive into really reading up about Bitcoin and also trying to understand how it works. You've got to get involved and actually trade cryptocurrency to understand it. It can't really be figured out from a few academic papers. So, in the last few years, it's been a pleasure and a learning experience to dabble in this world. I have no claim to expertise. I'm just this, well-intentioned financial historian who stumbled into the future. And I'm trying my best to learn from people who are nearly all younger than me. But you mentioned the conversations that I have with various masters of the universe, which you kind of have when you're at Davos or Aspen or one of these places where international conferences happen. And I do vividly recall bumping into Jamie Dimon, the long-serving chief executive officer of JP Morgan, in the Stanford campus. He must have been there at the Graduate School of Business giving a talk. And we know one another reasonably well from multiple conferences over the years. And he had just given one of those interviews in which he said it was tulip mania. You might remember that this was the standard way in 2017 that people in established finance dismissed the Bitcoin rally. It's tulip mania. Very few of those people actually know anything about the history of the great speculative bubble in tulips in 17th century Holland, but leave that aside. I said to him, Jamie, you're wrong about Bitcoin being tulip mania. That's the wrong analogy. And the analogy that I made at the time was with something quite different, the beginnings of equity finance. If you go back to the early 1700s, that's to say somewhat after the Dutch tulip mania, there were a couple of extraordinary bubbles in the stock of two monopoly trading companies that had been created by the British and French governments, the South Sea Company and the Mississippi Company. Now, the bubbles were extraordinary and sucked in all kinds of intelligent people, including Isaac Newton. But when they burst, that wasn't the end of equity finance. On the contrary, it proved to be that there was a better use case for stocks, for equities, than had been initially attempted. Because those early companies were really just supposed to be monopoly trading companies helping finance the wars that the Brits and the French were fighting against one another. Later on, it became clear that actually equity finance was ideally suited to large-scale industrial investments, funding the railways, for example. So I think the analogy that works much better is that crypto generally is a financial innovation that is not going to go away, but we're still running experiments to see what the best use case is for it. But I certainly disregarded that analogy with tulips, because that implied that this was just kind of meaningless speculation, because tulip bulbs are tulip bulbs in the end. They really don't have a use case beyond plant them, watch them grow. This is different, because cryptocurrency is certainly a way of raising money that is novel. That was the real story of all those coin offerings in 2017. But it's also more than that. I mean, it is a basis for transactions. In the case of Bitcoin, not you pay for your latte with Bitcoin, but transactions on scale. And I think the critical feature, going back to the original Satoshi paper, is these are transactions that are peer-to-peer without any third-party verification being needed. That's the revolutionary piece. And that means that you can have financial relationships that don't require banks and don't require governments And that's really, really what makes Bitcoin so interesting, that it creates a possibility for a new kind of payment, and therefore a new kind of asset. Needless to say, blockchain as a broad category of technology has all kinds of potential use cases. And I think we're still experimenting. In The Ascent of Money, I argued that financial history is an evolutionary story and should be understood as such. And so you get these periodic booms of innovation. New species are created. They don't all survive. Not all the cryptocurrencies of the last few years will survive. But I'm sure that, like equity finance, this is here to stay, and we probably still haven't found the optimal use for it.